Hello and welcome to Policy Watch and the last episode for the year 2016 as we focus on the headlines of the months gone by and what lies ahead in early 2017. It's of course been an exciting year in more ways than one. Global events like the election of Donald Trump as President of the United States, which have cast a shadow on international trade but also promised strong economic growth in the United States. In India, several legislations like the goods and service tax were finally cleared, and finally demonetization, perhaps the one move which will have lasting impact. And now as we look back and look ahead, what are the big lessons and takeaways from the Indian and world markets, their behavior, the response to developments, and their likely direction forward? What are the early signs that we can see today, if we can see them, that will set the stage for the year ahead? To discuss this, I'm joined by Ajay Bagga, Chairman of OPC Asset Solutions, and Devendra, Nevgi, CEO ZyFin Advisors. Gentlemen, thank you both for joining me. So let me begin with you, Ajay. So if you were to look back at 2016 and look at the year as a landscape and look at the beginning and today as we end the year, what's your sense?
I think the biggest sense is that Financial Times had forecast Hillary Clinton win and David Cameron would win the Brexit vote. I think both went very wrong. So the biggest lesson is experts don't know it.
Okay.
So don't believe the experts.
Okay.
Second big lesson is, given the liquidity in the world, no matter what happens, we seem to trundle along. I think we had an issue with Greece. January there was a sell-off based on China. We had Brexit come in, which lasted all of 3 days for the markets. We thought that there would be a big sell-off based on Trump and his policies, and markets have gone to historic highs in the US. So again, markets are getting a bit complacent.
Right.
I think that's the second big thing. And third is trade is going down, protectionism is increasing, but the global economy is still growing because of the liquidity, and the central banks will not let the economy falter. I think these are the three big things you should keep in mind.
Right, and that's an interesting point. Devendra, let me ask you to dwell on that. So every time we've seen a big shock, whether it's Brexit or the likely shock of Donald Trump becoming president or demonetization, we've seen shocks, we've seen markets react, but they've also bounced back quite quickly. So liquidity could be one reason. What could be the other reasons, particularly if you're looking at it from India?
So I think liquidity probably was important. I would put the was. Why? Because now slowly it's getting withdrawn. And as far as shocks is concerned, we have to break it down into what we call as the short-term or cyclical shocks, or something like demonetization, which is going to probably last for quite some time, maybe 1 or 2 or 3 quarters, rather than something like Brexit, as Ajay said, it lasted for around three odd days. So the bounce back is a function of that, how the market perceives it, and bounce back is also a function of external liquidity, at least in India, which is extremely important. And I personally believe that the liquidity withdrawal and the move from central bank monetary policy to the government fiscal policy will be so critical in the next year, which will drive the growth, especially in US, when there is it's an island as far as growth is concerned. So from an Indian perspective, I think the domestic factors would continue to be very important. How this demonetization evolves, what is the impact on the fiscals, what is the impact on the consumption-driven companies. That is more important.
Right. Okay. So, Ajay, if you were to start again from the beginning of 2016 and today, how would you describe the behavior of the markets and the overall impact? I mean, obviously things may not be looking as good today as they were, but they're not looking that bad either.
Correct. And I saw in the press that we had 4 black swan events in last year. It's become that the people are calling the end of the world too soon these days because of the way the world has become.
Stock markets, economists, media, everyone.
I think all don't get it right is what I feel. It's become, the stock market volatility has become huge, and I think that will continue. And
but would you say that it was higher in 2016 compared to 15?
Yes, it was because we had very sharp reactions and then sharp pullbacks. So there was Greece, there was China, there was an issue with Brexit, then the US presidential elections, within India the demonetization debate, and the actual.
So the interesting thing is, amongst the 5 things that you've said, 4 are actually global.
Yes.
that we've been affected by.
Yes, more global. See, domestically, we are growing at 6-7%, depending on what numbers you take. And it is a domestic economy. It's a consumption economy. 70% of our GDP is still the Indian consumer, like Japan and US. So it's an evolved economy in that sense. And that happens whether Babur is invading or whether Saddam Hussein or whether it's Greece imploding. That consumption continues.
Okay.
Now, what has happened with
Right.
demonetization, what Devin was also mentioning, you have taken the cash out, and we really don't know how that plays out. My personal feeling is in a quarter we should be okay, but there'll be a lot gone because 16% of your bank lending is SME. There's a 24% bank lending which is farm related. That gets very heavily impacted. There will be a lot of business models which will go off. Then there's the wealth effect. All of us sitting in Bombay have lost
When you say
wealth.
business models go off, can you elaborate?
See, there was a lot of business models, Govind, which were based on cash. So right from inception to their payments, to their savings, and then getting rid of their investments, everything was cash.
Okay.
Those will no longer find it that easy after demonetization and with GST coming. GST already was giving a warning to them. So added to that, so a lot of people will go out of business. They will have to change into organized, or they will just have to stop doing the business. So right now it's a mix of the two, or where there is a lack of liquidity, say Surat, 800,000 diamond polishers sitting there, diamond workers. Now if there is no demand, a lot of them have been sent back home, and then the small entrepreneurs are not able to pay them.
Right.
Just as an example.
Right.
That was an entire market which used to work. You go to Opera House, they would be walking in the streets with diamonds. Kalba Devi, you could get any amount of diamonds on cash, on a handshake. All those models will go off, and it's across industries.
Right.
Now, the big thing, what I was also mentioning, is the wealth effect. At the very high level, people like us owning houses in South Bombay, our mark to market has gone down. But the real hit is across where there is a short term wealth effect, like the farmer, the fisherman who's not able to sell his produce.
Or has to sell at a reduced price, yeah.
Then there is a wealth effect of the industrialists, people who were holding cash who are not able to change it. That will be 5-10%, not more than that, but there is a wealth effect. Third is the middle class, which is not able to get your liquidity and not able to, like, if you go on the C-Link and you're getting change for 2,000, you feel rich getting 19 notes of 100 because the banks don't have hundreds or 500s. That has changed the whole situation. That hits consumption, that hits investment.
Right.
And that will take some time.
Right. So, Devendra, if you were to look back again, 2016 going into 17, what are the areas that you think did well from a market's point of view and what did not? And are there lasting lessons? I mean, or some could be cyclical, but anything that fundamentally shifted or changed?
No, I think what has changed in 2016 is obviously the commodities rally, one, which is significantly higher. If you look at prices of commodities, zinc, crude oil, so all of them are really 40 to 50% higher. So that has changed. One, the perception on the US economy as far as growth is concerned, that has changed globally. And also thirdly, more importantly, the US as a economy, how much it will influence the global trade, the policies of protectionism, that has influenced a lot as to what will probably
What about industries in India? Where do you see any fundamental shifts?
So I don't
impact?
think any beyond the demonetization, as Ajay was saying, the impact
Which
on
impacts consumption in
the
general.
consumption and other tier 2 effects in general. I don't see any significant change beyond the stories of IT and pharma, which are connected again to regulatory issues or to structural issues in the IT sector as such.
But higher commodity prices, is that a good story for obviously those in the commodity space going into 2017?
So, well, it is a good story as compared to 2016, but in
15,
the long, in the 16 as compared to 17 now.
Fiscal, yeah.
But the key thing here is that what is the net effect? So, if, for example, crude might benefit X amount of companies, but higher crude also takes away some of the paint
Purchasing
companies,
power,
some of the other companies' margins eroded. So the net effect remains very important.
Okay. Ajay, what's your sense? I mean, have we any clear winners or losers as we go into it, or has it largely been stable?
The whole market was wrong on materials. I think metals, what Devendra mentioned, and nobody got it right. And that was the place to having been there, be it steel, be it aluminium, copper. You made a lot of money there. Miners globally came back. Oil companies, 2015 said Clarman was, adding as much, and we had discussed it on your program. That he's the smartest money is buying oil, and I couldn't see it. I think most of the market didn't see it. He's made a ton of money betting on the oil going from 30 to 60 and beyond. I think those were the themes that worked. India consumption, be it auto, be it durables, those worked. IT pharma lacked. FMCG was so-so. Again, the picture has changed in the last 15 days of December with the global sell-off. So, but I'm seeing broadly in the year.
Right. Okay, so let me get your quick prognosis for 2017 as we go in. Devendra, why don't you start off? So the 2 or 3 things that you're looking at as you see them in the rear view mirror, because obviously we assume events of the past or the recent past will influence events of the future.
So I think 2017 as a year probably could be a year of what we call as normalization. So the earnings which were almost flat in the last 2 years or so, or eight quarters, I think earnings, at least in the last quarter, September ending quarter, have been started looking up, after 7 to 8 quarters of flat and slightly marginal growth. So that impact of monetization now has to be factored into the earnings. So I believe that the first quarter could be really bad from a demand perspective, because liquidity and demand has gone out on the ground. So the first impact will be seen in the first quarter itself, and then how it pans out in terms of whether there is a long, and my fear is that I hope this demonetization doesn't have a long lasting structural impact on businesses. As Ajay said, that there might be a scene where some businesses are going out of the
business model itself might disappear
forever. There are things like coming back, or forever going out is a more dangerous dangerous
We're running out of time. Quick synopsis 2017, the 2 or 3 things that you're looking at.
I think one, the government has to bring in very strong reforms. GST has to be implemented. Second, you need pump priming for the economy. Monetary policy has played out. Maybe another 25 basis point what RBI can do, not more than that. Fiscal has to step in now. So if you have to increase the fiscal deficit, do that, but pump back liquidity into this market. Third will be, what does the budget bring in terms of corporate and personal income taxes being reduced very clearly there. Globally, what does Trump do? Does he follow through on his policy? Will he create trade barriers, reducing the global trade? Will he hit back at H1B? That will have a direct bearing on India. Will he cut income taxes? That will lead to a lot of money again flowing into the US markets.
So, I mean, on balance, you're saying it's an equal mix of pluses and relative minuses.
See, we see more minuses because we understand the market, but it doesn't play out that badly. That is the big picture of 2016. Experts don't know, and so trust your gut.
And markets seem to be resilient overall. Right?
Markets are much more resilient than we forecast.
Right. We've run out of time on this one. Thank you so much, folks, for joining me. We're going for a break. On the other side, we look at the economy, what happened in 2016, and once again, how could that set the stage for 2017? Welcome back to Policy Watch as we continue our look back and look ahead at 2017 in our last episode of the year. Now, the year gone by was largely positive when it comes to key economic indicators like inflation and interest rates. Inflation has been falling, and so have interest rates, though more slowly. Economic growth has been slowing, though the real slowdown will only kick in when the full effects of demonetization are felt. So looking back, how does 2016 compare in economic indicators? What stood out for India in a competitive world and other emerging markets? And which of these factors will matter most as we go into 2017? And what is the general economic prognosis, if we can have one, in early 2017 at least? To discuss this, I'm joined by Saugata Bhattacharya, Chief Economist at Axis Bank, and Suvodeep, Rakshit, Economist at Kotak Institutional Securities. Thank you both for joining me. So let me begin with you. If we were to look at 2016 as a landscape, we started at a certain point where things were perhaps looking okay, I mean, not gloomy, not very positive, but things seem to have evened out, and then of course we had some shocks later. How would you look at it?
2016 was a pretty remarkable year. I mean, you remember the early days, January of 2016, with all the noise from coming out of China. I mean, there was a huge turmoil in the global markets, then one after the other, whether it be Brexit,
China, Greece,
Brexit, and with Donald Trump moving in. I mean, from the global side, I mean, there's been a series of shocks. But two things stand out globally in 2016. One is the rise of the dollar, and together with that, very surprisingly, the rise in commodities prices. I think both of them have had a significant impact on India. India, the remarkable thing, that the most striking thing in mid 2016 was the story of the good rains. So after 2 years of drought, so that put out expectations that India's growth, GDP, GVA growth would actually move up, significantly up from the last year. Then, of course, at the end of the year, this remarkable social economic experiment that came in. So that, I think, set the stage for both domestic factors and the influences of the global economy in 2016.
Right. So it's interesting because, I mean, as I was discussing in our earlier segment on markets, amongst the 4 or 5 things that impacted us as an economy and perhaps markets, at least 4 of them were global and not Indian. Or local, not local.
Yes, I mean, to a very large extent. Because, I mean, whatever happened on the global front also had another impact on India that kept global growth down, and as a result, consequently, global trade down.
Okay.
So India's exports, the improvement that you have seen in India's exports was essentially, one was the base effect of the sharp fall for the year before, and the rise in commodities prices. So the two together seems to have taken export growth out, but in volume terms, value terms, growth has still been relatively flat.
So Suvodeep, what are your highlights for 2016 when you look at?
Saugata, I think, summarized it completely. But the point is, I think, it's also that we came off the back of the Fed rate hike last year, that we moved into the 2016. Obviously, then we had the series of shocks in terms of the China, and we had
Greece, Brexit,
everything. Yeah. I think the resilience of Indian economy is what stood out in some sense, both in terms of obviously how the markets have performed, as well as from an economic fundamentals point of view.
And what's the reason for that? I mean, obviously people are talking about that, but why in your mind?
See, over the last 2 to 3 years, 2013 onwards, there have been series of measures being taken either on the external sector front or even on the domestic front in terms of growth and reforms and everything. Those aggregate up to some amount of resilience which the Indian economy is showing. From that perspective, I think it is also, when you compare it with the other emerging markets, there was lesser political risk, there was lesser economic risk, there were lesser, turmoils in terms of political events affecting India, though there were in terms of military, surgical strike, etc. But the point is that it was at a much better footing than the other emerging markets. So flows, when they came in, India was one of the outperformers. If you look at the currency, you'll see amongst its peers, India continues to outperform.
Right. So is it also because in some ways the appreciation of India as a safe destination has improved or bettered in the last year or 2 years?
Absolutely.
Or is it the fundamentals changing? I'm wondering
so
which is more.
It's actually both of them. Because what happened is, if you do a relative study, you'll find countries like Brazil or Russia, which are significantly lacking either in terms of the fundamentals. For example, Russia, oil price, etc., has a huge hit on it. And Brazil has, in terms of corruption, in terms of other fundamentals.
And growth is now on the other side.
Exactly.
Negative,
so commodity prices, etc., hit them. India benefited from all these. Lower commodity prices, India benefited out of it. In terms of reforms, India was at the forefront, right? So all these measures together came, and 2016 turned out to be a year where India was favored than the other years. So it's a confluence of factors. It's not just economic fundamentals, it's also things that they have done in the past.
Right, wonderful. So Saugata, as we now step into 2017, so if you were to, the 2 or 3 things that you talked about as significant, you talked about the fact that we've not seen or we've survived, and we've also seen prices go up, right, of commodities. Which of these will you, or in your mind, will play out stronger?
Well, I mean, survival, as taking off from where Suvodeep was talking about the reforms, one of the key things which made global investors appreciate India more, fundamentals had improved. Well, some of these 2 very large reform bills that had been passed. One was the first one was the Insolvency Act, and then came the GST. So these set the stage for a deeper structural reform of India. I mean, so we expect that the GST, and given what we have seen yesterday, that the GST GST hopefully gets started in April. If not April, then early on in the next year. So that will bring about very systemic, very important systemic changes in the indirect tax structure, which is likely to make India's economy, if not the next year, in the next couple of years, much more resilient, much more efficient. So that's one. We have to live with commodity prices moving up. I think overall...
But would that take away some of the gains that we've had?
No,
oil,
no.
For instance?
To a certain extent, it will take the gain away in the sense that some of India's prices, which are influenced by global prices, imported prices, that will move up. But as Suvodeep pointed out, I mean, up to a certain point, rise in global commodity prices makes the entire emerging markets complex much more attractive, and India benefits. So whatever we lose in terms of the ability of the Reserve Bank to cut rates a bit more deeply gets offset by the increased capital flows that come into the emerging markets. So all of that. So net up to a certain point, and particularly oil. Oil, we think, I mean, prices of course have moved up because of the OPEC cuts. But given the elasticity of shale oil, my sense is that, I mean, it's not going to go up to.
Right. So if I were to ask you about the sort of axis of interest rates, inflation and growth, and let's focus on interest rates and inflation. We've obviously ended more benignly than perhaps we thought we would at the beginning of the year. And how are we going ahead then?
So, well, I mean, even without the RBI cutting rates, I mean, the drop that you've seen in deposit rates first and even some lending rates, I think that's likely to continue into this. So, I mean, automatically the entire yield curve, the interest rate curve has shifted down. Benefit a lot of borrowers at some point in time. With inflation, that's a little bit of a worry because core inflation, as the RBI also pointed out, seems to be fairly sticky. And I don't see core inflation coming down. Well, if food prices come down, and this is the hope that again we get a fairly decent monsoon and rains. So if that actually happens, I think India's growth trajectory will remain very, very positive.
Right, and that leaves demonetization. So, I mean, that's the one thing which could obviously affect, and some projections are already there. What's your sense? First quarter to second quarter of 2017 calendar.
See, if you look at the demonetization impact, it can be broken down into three parts. One is the liquidity impact, second is the income impact, and the third is the wealth impact. What we are seeing now is the liquidity impact. The income impact obviously can be seen even now, but the point is
there is uncertainty, income uncertainty.
It is, but the point is a structural change in the income effect comes in only if the liquidity impact continues further into, say fourth quarter or the first quarter of next fiscal. So from that perspective, it is imperative that the currency in circulation to a great extent normalizes as soon as possible. If not, there will be a secondary impact which can hurt the economy further. Third and fourth quarter specifically, I think there is some weakness, but I think, on official numbers, it might not show up because there is a difference in...
So, and you talked about wealth impact. So what's your sense?
See, the wealth impact is something more long lasting.
Okay.
So
and that's going to happen too?
Of course it will, of course. So there's a stock of black money, grey money, whatever you name it, has been hit, which will have an impact on certain sectors which are very, very cash dependent. So, sectors like real estate or jewelry, where traditionally you will see some of these unaccounted incomes flowing into, will obviously have.
So amongst the areas of uncertainty that we have going into, we are obviously looking at these three things.
Yes.
I mean, to the income and wealth, and of course the liquidity, which is current short term. The one thing that surprised you in 2016 as we close, if it did?
Well, obviously the first one has to be the early November shock.
But that's a specific decision. It's a move by the government. I think something that happened.
And we have been perpetually, continually keep getting surprised in 2016, year of surprises. But I think the way that commodity prices have moved up, essentially, because that's something which is very, that's very fundamental to India. And the fact that global central banks have seemed to be shifting away from quantitative easing monetary policy and the focus shifting more to a fiscal stimulus, I think that was the most surprising part that I...
Okay, and the one thing that you would look out for in 2017?
The dollar.
Okay.
Absolutely the dollar. How much further does the dollar strengthen? Because that will have a raft of impacts on emerging markets currencies, and India being part of various investor baskets, I think will be a very important component.
Right. So there are a lot of global factors to watch out for and a few Indian factors as well, and there are some good ones coming, assuming GST gets implemented on time or close to time. We've run out of time as well. Thank you so much. That's all we have time for on Policy Watch this week. We'll be back next week, same time. Thanks for watching.